Welcome to this Hantec Markets video on capital preservation and reward to risk ratios. As explained in our Understanding Risk and Placing Stop Loss Orders video, risk is not something to be afraid of. Without risk, there is no opportunity for reward. However, you should be aware of the impact that losses can have both on your account balance and on your psychology. Let's assume you open an account with $10,000. It could be pounds or euros, but for simplicity, we'll use dollars. A loss of $1,000 on this account is not catastrophic. In order to get back to where you started, you obviously need to make a gain of $1,000. Now, although your loss was 10% of your original deposit, the profit that you must now make in order to get back to your starting level represents a gain of 11% on the funds remaining. At this level, it's not so bad, but if the losses are allowed to get out of hand, it gets tougher and tougher to get back to the starting level. If you lose 20% of your starting balance, you'll need to make a gain of 25% on the remaining balance in order to return to the start level. If you were to lose 40% of your starting balance, then you would need to make a gain of 67% on the remaining balance in order to return to the start level. If things get really out of hand and you lose 50% of your starting balance, you'll need to make a gain of 100% on the remaining balance just to get back to where you started. Only after that will you be in a position to start making some real profits. One of the simplest things you can do to improve your trading performance is to pay attention to the size of your average winning trades and the size of your average losing trades. Ideally, you want to be targeting a reward or profit that is several times larger than the risk that you are taking on each trade. In this example, you can see a series of trades split 50-50 between winners and losers. Although the individual results are different, the average amount won on a winning trade is $40, and the average amount lost on a losing trade is also $40. In this example, the net result is that the trader has broken even. If the trader is able to improve his or her win-loss ratio while maintaining an even ratio between the average size of a win and the average size of a loss, then the account will start showing an overall profit. Although many traders believe they can be right more than 50% of the time, let's see what happens if the win rate is actually much lower. In this example, only 25% of trades are winners, while 75% of the trades result in a loss. However, notice that the average size of a winning trade at $60 is 3 times larger than the average size of a losing trade at $20. This trader has achieved a reward to risk ratio of 3-to-1. As a result, the trader has managed to break even after 20 trades despite just 25% of them being winners. And if the win rate improves even slightly, while the ratio between the average winning trade and the average losing trade remains the same, you can see that the account will start showing an overall profit. In order to achieve this type of result, you need to follow the old market rule of cutting losses early while giving winning trades room to run. Don't make the amateur's mistake of taking profits too early and holding on to losing trades in the hope that eventually they will turn around, because they may not. As this example shows, it's perfectly feasible to incur a large number of small losses and still make a profit. Understanding this fact should give you the confidence to act on more of the opportunities you discover in the market, secure in the knowledge that even with a large percentage of losing trades, you can still be a profitable trader. Be sure to watch our videos on position sizing as well as understanding risk and placing stop loss orders. Once you bring all of these elements together and develop a methodology that includes correct position sizing and risk management, as well as having average wins that are significantly larger than your average loss, you should have a system with positive expectancy. Once you have a system with positive expectancy, it should be fairly obvious that the more trades you place, the more likely it is that you will be able to achieve profits and grow your account balance.